Now adjust the volume control so that the sound can be heard in all parts of the room.
This is the Protect Your Assets podcast.
Mr. Sandman.
You get the idea?
Bring me a dream.
It's on the internet.
Make him the cutest that I've ever seen.
Go on.
Give him two lips like
It's like no cheese I've ever tasted.
and tell him that his
Here's the Sandman.
over, Sandman.
Good morning. Welcome to Protect Your Assets. I am David Hollander, your host. It's so great to be with you this morning. For those of you just joining us for the first time, welcome. People around here, they call me the Sandman. That's because I help you sleep better at night by answering any of your most troubled tax, legal, or financial questions. Been doing this for over 30 years. You can always email me a question by shooting me that question to questions at PYA Radio, stands for Protect Your Assets.com. The 100 Days of Darkness, what am I referring to? Well, let's back up. The 100 Days of Darkness, that's a phrase that is used by many to describe the first 100 days you go through when bringing a newborn baby home from the hospital. And let's face it, the last couple of months, a lot of babies have been born. It's fittingly coined that for those brand new parents who bring their firstborn child home. If you really want to understand it more, just Google Scary Mommy 100 Days of Darkness and read the blog article. The anxiety you felt, remember this, the helplessness, the sleep deprivation, all of it. And the worst part about it wasn't all that. The worst part was just how unprepared you really were. And I hate to break it to you, but those first 100 days of retirement, well, they're going to be so similar in many ways. The excitement, the anticipation for having the baby and the target retirement date, well, those are real, and you can think about that. You wait 9 whole months to meet your child, and those 9 months feel like an eternity. In retirement, you've worked and waited and anticipated for a heck of a lot longer than that. Regardless, the feelings, well, they're similar. It's extremely easy to paint a picture of what the experience is going to be like when you finally get there, but unfortunately, after doing this for over 30 years, it just doesn't usually work out that way. So do yourself a favor and keep it right here this morning as we look through the ins and outs of the first 100 days of retirement, because you don't know what you don't know. It's all coming up next, so keep it right here. Now, let's get started. Well, Trump said he's going to hit China with another 100% tariffs, and markets dropped. The Dow was off this week 2.7%, S&P off 2.4%, NASDAQ off 2.5%, the international index off slightly at 0.7%, 10-year Treasury holding in right at 4.06%, and oil, another tough week for oil, down 3.4%, closing at below $60 a barrel at 58.83. So there are a few reasons to suggest that this bump could represent the start of a more volatile October as we approach the remaining part of the month. First, we're entering the period of the year when volatility is typically higher. Looking back over the past 40 years, the volatility of daily returns, well, it's just higher in October than any other month. This historical pattern is not guaranteed to be replicated this year, but it does point to some seasonal risk around markets, and we just saw that this week. Second, this risk could be exacerbated by, of course, the government shutdown, any more political or economic news that were to come out, a prolonged shutdown, more trade policy headlines, or surprise economic data, and of course the more cautious Fed could all shift the market sentiment. And third, and finally, with equity markets near all-time highs still, and all valuations fairly elevated, there could be a pretty good risk of a reassessment of the fundamentals and profit taking as we move to the closer part of the end of the year for people taking their tax thoughts in mind, which we're doing right now. So all those things, well, those could just drive markets lower. So where was the shining spot this week? Well, gold. Gold shined the brightest this past week. Perhaps the most striking reality of the uncertainty has been the gold market. Prices moved above $4,000 an ounce this past week, up from $2,660 at the start of 2025. So trying to get your mind around the precise drivers of this approximate 50% increase in gold, well, it's fairly challenging. If you look at the economics, they often look at the trend in real interest rates as a driver of prices, i.e. when rates go higher, typically that's bad for gold. And if you have rates going lower, well, that's typically good for gold. But if you look at that this year, that really hasn't been the case, because rates just recently went down one time this past meeting. It was a quarter point. It wasn't anything significant. So why has the price moved so much since the beginning of the year? Well, is it central banks? Are central banks shifting to a gold reserve accumulation? Well, I don't think so. If you look at the amount, it's just not large or fast enough to prompt such a large repricing, in my view. Finally, the case for gold rallying as part of a safe haven flow against near-term downside risks, well, that would seem to clash with the stock market prices and values trading right now at all-time highs. So that leaves the concern over rising government indebtedness and, of course, increased political pressure on central banks. If we look at the amount of U.S. debt held by the public, well, it's set to become larger than annual GDP by the end of this year. And markets might see the political gridlock right now as evidence that the tough political compromises likely to needed to address these issues may be tough to find. So this is not just a U.S. issue with debt high and rising across many other developed markets. We're seeing these sort of patterns play out around the world, and that could just be driving these prices higher. Meanwhile, you look at the political pressure on the Fed right now to lower interest rates, threats to fire Fed board members, and uncertainty over new appointments. Well, this could be undermining the confidence around the independence of the central bank and encouraging a greater allocation to long-term stores of value like gold. It's hard to understand the extent of the concern and the impact on gold. So given the strength of the rally up to this point, I think you should be cautious about chasing prices right now. If you're considering exposure to an asset class like this, well, consider a basket of broad-based commodities. That could offer you a little bit more balanced approach as you look at that. Also, keep in mind that volatility right now, it's normal this part of the year, and we typically see at least 3 to 4 dips of between 5 to 10% each year on average. So this could present an opportunity for you to enter markets at a better value, better price, or take some profits like some people are starting to do off the table and buy those areas maybe you're not invested in. I'm going to switch here to our crypto monthly discussion, so maybe you think about that a little bit. But overall, I still remain optimistic about the outlook for the growth and corporate profits next year in 2026. I think this will continue to be helped by easing of interest rates, certainly maybe some stability in the trade policy again. The tax cuts, as we know, are permanent now with the big, beautiful bill. This will only help households and businesses. And so I think investors should keep your focus on long-term horizon and speak with your advisor right now about ways to protect your principal in volatile markets. What sort of things are out there right now that maybe you don't have exposure to, like alternatives or fixed indexed annuities, certainly life insurance for tax-free benefits. All these are going to be very important as we move into the volatility that could be ahead of us now. Now let's switch to the monthly update on Bitcoin. Bitcoin, again, hit some milestones. The industry advances that we saw. Global payment network SWIFT, they're going to build a blockchain-based ledger with JP Morgan, HSBC, and some other global banks. And this is going to enable real-time cross-border payments in digital asset transactions. Morgan Stanley's E-Trade, well, they're going to launch a crypto trading in 2026. The CBOE Index, CME Group, Gemini, Kraken, FalconX, and Prime XBT, well, they announced expansion of their derivatives businesses. We also saw PayPal. PayPal said that they have over 400 million active accounts. They're going to add cryptocurrency to their peer-to-peer payment. You may know the PayPal link. This will enable you to send and receive digital assets directly. And Robinhood, well, they were added to the S&P 500 index on September 22nd. How about some ETF news out there? Well, the SEC approved generic listing standards for spot crypto ETFs. This removes the need for lengthy case-by-case approvals, meaning faster launches across more crypto. Vanguard is reportedly weighing in on whether they are going to let their brokerage clients access third-party crypto ETFs. This would reverse its long-held position of rejecting crypto products. New launches, Grayscale CoinDesk Crypto 5 ETF. There's a Grayscale Ethereum covered call. Defiance came out with a leverage long income Ethereum ETF. So you're just seeing, again, these folks who participate in the world of crypto going more exponentially out there. So that you be very careful with those sort of things. Multiple issuers have also filed or saw proposals advanced for a variety of crypto ETFs, including BlackRock, Grayscale, and the SEC approved options tied to the CBOE Bitcoin US ETF index. So those are some notable ETF news out there. Stablecoin progress. Well, the stablecoin market cap topped, get this, $300 billion for the first time on Coin Market Cap. Citibank projected the stablecoin market could reach $4 trillion by 2030. And companies that announced plans to launch stablecoins, well, ING, UniCredit, HSBC, Commerce Bank of China, and other companies that made various moves in the stablecoin ecosystem: Google, Coinbase, Salesforce, American Express, Visa, MoneyGram, Societe Generale, Deutsche Börse, and Tether. Some important regulatory moves we saw. Patrick Witt, the executive director of the White House Council of Advisors on Digital Assets, well, expects a sweeping crypto market structure bill to pass before the end of this year. SEC Chair Paul Atkins confirmed that by year end, the agency intends to roll out an innovation exemption designed to let crypto firms bring new products to market without having to comply with previous regulatory requirements. Mr. Atkins also reiterated that crypto's time has come, underlying the urgency for clear policy framework and U.S. leadership in the space. So other international headway, we saw the EU, UK, Australia, Japan, South Korea, Hong Kong, all taking steps towards backing advanced digital assets and blockchain technology. So there's your update on the crypto space. What does having a baby have anything to do with your retirement? Well, you're going to be amazed at the answer. It's all coming up next. Keep it right here.
Take the first step toward reaching your financial goals and get the information that can help you live a confident retirement. That first step is going to PYAevents.com and signing up for our next free event. That's PYAevents.com. Now back to Protect Your Assets with David Hollander, the Sandman.
If you're retiring soon or you just recently retired, you're going to want to pay close attention because the 100 days of darkness, well, they're going to affect you. What am I talking about? Well, let's talk about it. The build-up, stage one, we'll call it. The concept of the 100 days of darkness and the struggle that a parent of a newborn goes through is fitting to compare to the experience from start to finish for someone who is newly retired. But really, it's not only the first 100 days that are similar, but all of it. The event of having the baby and comparing it to your last day of work and your first day of retirement. The crazy anticipation over a 9-month period as you prepare and plan and wait for your bundle of joy compared to the years of anticipation as your target retirement date draws nearer. And then subsequently the 100 days of darkness that ensues where reality sets in. All of it. Let's start with stage one. We'll talk about the buildup. The buildup of having that first baby, it's all about hesitancy, uncertainty in the early days, followed by extreme nesting and finished off with extreme excitement and, of course, anticipation. In the first few months, you start asking yourself things like, are we ready to become parents? Can we afford this? Do we really know what we're doing? Should we take classes or educate ourselves somehow? What if it doesn't work out? Aren't those all the same questions you start to ask yourself when you start to think about retiring maybe this year? Weird, right? They are the same questions. Do you have enough money to retire? Will you be okay? Is there some sort of a class or education you can get? Or should we be looking to hire a financial advisor? Once those beginning stages of the build-up pass, you transition into, well, nesting mode. For expecting mothers, you begin to get the baby's room ready. You finish off any projects around the house. You make goodwill trips. You even start getting the furniture out. For the pre-retiree, well, it's similar. You may start taking inventory of your financial accounts. Maybe you start looking at your monthly income needs as compared to your budget. You may start interviewing advisors or attending seminars or classes like the one I was talking about earlier. Again, if you want to go to our seminar or workshop, go to our website, libertygroupllc.com, and click on the events tab. We have lots of them coming up this month. And lastly, the anticipation and excitement which sets in. You've got everything done. You feel prepared. Whether you're ready or not, that day of retirement, it's coming, and there is no going back now. It's time to just hang in there and meet the baby or work your remaining days out. Obviously, these are complicated decisions, and you should try to become more educated about all of your options if you're considering retiring. Many of our clients, well, how do they start the process? They go to one of our workshops, as I've been talking about. Right now, we're doing a tax reduction strategy workshop on things that you can do right now to take advantage of the big, beautiful bill. After all, there are some deductions that will only be available this year in 2025. And once that year is up, which is coming to a close before we know it, that's it. It's over. And I know this can be a lot to digest, but I find that when couples leave our class, they have a better appreciation for the importance of a comprehensive plan and how they might approach tax planning before the end of the year. Taxation, well, it's one of the most overlooked topics, particularly when you enter retirement. You're going to start receiving income from Social Security, from possibly rents, a pension, your 401k. All of these things are important. And it's important to start out with a retirement planning process that takes taxes into consideration. Also, if you get a copy of the checklist, we're going to go ahead and give that to you this morning. This will help you understand why we might make certain recommendations when we meet with you. This will also help you ask better questions and give you more confidence in the plan that you build for your retirement when you put all of those pieces together. I'm a big proponent of educating yourself. In fact, that's why our checklist is the best way to start doing that. It'll help educate you on the most important aspects we've found of clients who get ready to plan for retirement. Do like some of our radio show fans have done that we've met over the years. You've probably been meaning to call us, but it just hasn't been the highest priority. But right now it is. And so you're thinking about how you're going to retire. But if you're like that new parent expecting a baby and you're in the 100 days right now, why wait until it's upon you? It is so easy and painless, and it is complimentary, and we'll help you do the heavy lifting. All you have to do is pick up the phone right now and call this number and ask for the retirement checklist. Call this number, 866-PROTECT, the number to call right now, and have them email you this retirement checklist, which is absolutely complimentary. It'll give you our top ideas right now on things that maybe you haven't even considered when you're thinking about retirement. 866-776-8328. Ask for Lucas or Dylan. They'll be more than happy to send that right over to you. Again, 866-PROTECT. to get your retirement checklist. Coming up next, it's time for our popular They Say segment, where they say turning on monthly income, well, it's like changing diapers. Is that true? Find out. You're listening to Protect Your Assets with David Hollander. That's me. I'll be right back.
Take the first step toward reaching your financial goals and get the information that can help you live a confident retirement. That first step is going to pyaevents.com and signing up for our next free event. That's pyaevents.com. Now, back to Protect Your Assets with David Hollander, the Sandman.
All right, the 100 Days of Darkness. It sounds pretty scary, doesn't it? Well, we're talking about the 100 Days of Darkness after you bring your baby home and how strikingly similar that is to retiring. But before we do that, now it's time for one of our fan favorite parts of our show. This is our They Say segment where we debunk common myths, half-truths, and sometimes just bad advice that they say.
Who are they? What do they know that I don't? And what are they saying this week? There's only one man with all the answers. And here he is, David Hollander, the Sandman.
All right, so here's one they say. They say many that once you retire, creating income off your investments, well, it's as simple as changing diapers. Is that true? Well, let me read to you a story about a new mom. How old is your baby? Asked a woman not much older than me as I tossed 4 bars of chocolate into my grocery cart, 2 of which would be my reward for getting the baby to sleep that afternoon. Almost 3 months, I responded, blinking in the harsh light and quickly rubbing my eyes to check for crust after remembering I hadn't looked in the mirror before leaving the house again. It wasn't until someone spoke to me in public that I realized that in rushing around like a lunatic getting the baby ready, I didn't even give myself a once-over. The woman nodded sagely and said, you're still in the 100 days of darkness, before commencing on how cute my baby is. 100 days of darkness, well, if you've had a baby, you can relate to the above story. How easy was it for you to change your baby's diaper when you were a zombie? 0, right? If you're retiring soon or you're just recently retired, well, you're going to want to pay close attention because those 100 days of darkness, they're going to affect you. In the previous segment of the show, we were talking about the first stage where you're planning the event of retirement. Now we're talking about stage 2, which is the event. The actual event occurs, and boy, is it magical and scary and intense and gratifying, life-changing, all at the same time. I'm talking about having a baby, the actual act of labor. And I'm also talking about working your last day and waking up the following Monday, and instead of showering and driving into work, you do whatever you feel like doing. The actual event of retiring is a lot like what climbing Mount Everest would be like, believe it or not. What a journey and what a tough task it would be. Quite the accomplishment to climb Mount Everest successfully, just like it is to work long enough and save long enough to actually feel confident that you can retire and make it all the way through. Did you know that the vast majority of people that climb Mount Everest, they die on the descent, not on the ascent, but on the descent? Translation, it's actually easier to climb the summit of Mount Everest than it is to go down. In our opinion, it's easier to save and stash money away on your way to retirement all those years, the act of climbing up the mountain in our analogy, than it is to retire and then turn that chunk of cash into a consistent cash flow while you're going down the mountain, so to speak. And so back we are at the event, the physical act of working your last day and the jubilation that most people feel and have as they exit the workforce and enter retirement. It's what a ton of people work a lifetime for and dream of for a long time. And the point I'm trying to make is that it might seem like you've made it once you get to that actual date, but you can't forget that you still have to climb down the mountain. And in retirement, that means that you have to make your money and your assets last as long as you do, because no one wants to run out of money before they die. And that's exactly where things tend to get tricky. During your climb to retirement, you simply save as much as you can, invest as much as you can. Sometimes, as I talked to somebody yesterday, not even thinking about the risk of the market, because after all, you have time to let it bounce around and do what it's going to do. You wait, of course. You have time. It's actually pretty simple if you're even halfway through the ascent with your money. But when you retire, well, think about that changing. The script of accumulating flips on you, which is why everything gets so hard. Instead of saving money, well, now you're spending money. And if you add to that markets free falling, that makes it even more difficult. You're not investing any aggressively anymore now. You're paying attention to the market. You're trying to be cautious because a bad market cycle could affect your retirement in a pretty big way, particularly if you're familiar with the 2008 crisis we went through. And for a lot of people, it's not until they physically retire and they are starting their 100 days of darkness that they actually realize this very real fear. So let's examine the third stage of the 100 days of darkness. Have you had children? Try to think back to your first child in those first 100 days. It was pretty stressful, right? Every sound the baby made, every squeak, cough, movement you heard through that device in your bedroom, it's terrifying. I remember thinking as we pulled away from the hospital with our 2-day-old strapped tightly in the car seat in the back, they are really just going to let us take this baby home with us, really? And this is where I might lose you with my comparison of having a baby to retirement, but hear me out for a minute. During the first 100 days as a new parent, you are sleep deprived. You're filled with anxiety and fear. You tend to lose a sense of self and purpose as the days blend together. You might see your relationship with your spouse suffer a little bit. You lose your daily routine overnight and you're forced to develop a new one simultaneously. And the biggest point I want to make here is that before you had the baby, you really didn't think it was going to be that hard, nor did you expect any of what's happening to happen. Well, retiring, it's not that different. During the first 100 days, this is what new retirees typically report to us. They lose their daily routine overnight. They're forced to reevaluate their investment strategy and change the way they think about money. They also typically see their relationships with their coworkers, their colleagues, even their spouse change because now they're no longer there, or they're doing something different, or they're there more often than they were used to be, and spouses may get upset with that. You may see your significant other way more than you used to, and that could get some getting used to for yourself. You may very well be filled with anxiety and fear about how things might transpire. And like it was with the baby, you really thought moving into retirement that it was going to be a lot easier than it was, right? How could you have come to expect that the first 100 days or months were going to be so difficult and outside of your expectations? Well, there is some good news. We have a solution for you, of course, that might help eliminate some of these issues that you're undoubtedly going to face. It may sound simple, but it's called a written questionnaire. It's crazy to think about, but the amount of people that we meet with on a daily basis here in our local Bay Area office, they're planning on retirement and they think they have a financial plan, but they really don't. And the number that we meet with, it's staggering. It's scary. So you really need to think about this and get prepared. And so this morning what I'm going to do is I'm going to go ahead and give you my retirement checklist. But before I do, ask yourself this question. Is your coach showing you how to navigate through these types of decisions that you're about to face? Have they prepared you properly? Do you have a plan that you can execute and score that touchdown when the time comes? If the answer is no, then you should ask yourself, well, why not? The real question you need to ask is, how much income do you need in retirement to produce consistent, reliable, and tax-efficient income for the rest of your life so you can do whatever you decide to do and live the lifestyle you want? Is that actually spelled out for you? If you can't answer that question, then you're only fooling yourself right now. And according to Nobelist Professor Merton of MIT, you need to be thinking about that question right now while you're still working. You see, retirement income planning, well, it's different. It's a different type of financial planning than saving for retirement. And according to Professor Merton, the advice that got you to this point, it's different than the advice that you're going to need to get you through retirement successfully. It's kind of like a college football team trying to play against the 49ers, right? That's just not going to work. So coming to my office for a complimentary 1-hour consultation could change the next 40 years of your life. Think about that. If you're tired of working, you are married, and you're in your 50s, then statistically, one of you will live another 40 years. Don't you think spending an hour with our team is worth 40 years of less stress? We do have the best coffee in the Bay. We have free parking. We have a great staff who will greet you when you arrive. And best of all, we're right here in the Bay. We are local. Give us a call, 866-PROTECT, and have my team send you right now this retirement checklist that I've put together just for you this morning. It's absolutely complimentary. We're happy to send it to you. Call us right now. Dylan, Lucas are standing by. Call them, 866-776-8328. Again, to get your free retirement checklist, 866-PROTECT. It's your money. Find out what it can produce for you each and every month. 866-PROTECT. Coming up next on Protect Your Assets, what are the 5 essential components that you need to know before you retire? We're going to go over that next segment. You're listening to Protect Your Assets with me, David Hollander. I am the Sandman. I'll be right back.
If you missed any of Protect Your Assets with David Hollander, all you have to do is go to pyaradio.com, where you can download or listen to our latest shows for free. Just go to pyaradio.com on your computer or mobile device when it's most convenient for you. That's pyaradio.com. Now, back to Protect Your Assets with David Hollander, the Sandman.
So today we're talking about the 100 days of darkness, and what does that mean? Well, it has a lot to do with having a baby and your retirement. If you are retiring soon or you just recently retired, you're going to want to pay close attention, because the 100 days of darkness, well, they're going to affect you. And in the last segment, we were talking about the best way to prepare for that event, and one of those was to get a written financial plan. But what does that really mean? And do you have a well-written plan that covers some of the necessary details that you're going to want to know more about? Well, here are 5 ideas to consider as you think about your plan. First, the investment component. This is what everyone wants to focus on, and it's important, don't get me wrong, having the right investments for what you want your money to do. Well, it's a big deal. So you need to make sure your financial plan matches the right investment vehicles to accomplish your goals. Second, the social component. This is all about how you are going to spend your time when retired, what you're going to be doing, and what it's going to cost you to do those things. You have to set aside time to develop a social life so that you're prepared for the everyday is a Saturday concept. Third, the income component. This is probably one of the most important. The income component is what drives the investment component and the social component. Make no bones about this one. Retirement and confidence during retirement, it's all about having that steady paycheck that you create that's consistent, reliable, and keeps paying you enough to support your lifestyle so you don't have to worry about it. And yes, you do need to have the right investments and that you have the income that you need to live on to do what you want to do. Fourth, the estate component. Don't overlook the basic legal documents like a will, power of attorney, trust. As you know, we are attorneys. We help you prepare these documents, and you should only do that with an attorney who knows what they're doing and is familiar with your county and the probate department that your family could end up in. Make sure you know what's going on before your family steps into that one. Fifth, the health component. This is another big important one. Don't forget about health, Medicare, long-term care. Talk to someone again who's had experience with nursing homes, catastrophic care. How do you take care of a spouse or a parent? These are all very important subjects that we've been dealing with for well over 30 years. We have been doing this for a very long time and have a lot of experience when it comes to assisting people with these issues. Whew, that was a lot. So do this for me now. Will you inhale through your nose, exhale through your mouth, in your mind, picture a day when you don't have to worry about money, taxes, or what you're going to do in retirement. You've thought about it and prepared for it. Picture a day when you're standing on a deck looking at the Mediterranean and trying to decide, should you have the rosé or an Aperol Spritz? Suddenly your wife catches your eye and thanks you for making all of this happen. Picture a day when you can relax, travel, and do all those things you've always wanted to do. It starts with the conversation. Get our retirement checklist right now. This will help you get started. It's absolutely complimentary this morning. It will only take you a few minutes to go through it. Dylan and Lucas are sitting there right now ready to send it to you. Give them a call, 866-PROTECT. That number, 866-776-8328. Stop worrying. Stop thinking about this. Pick up the phone right now. Call us, 866-PROTECT. We're happy to share this with you. I'd like to give a big thanks to the Protect Your Assets team for putting together another great show today. My executive producer, Kevin Renford, network manager this morning, Raf, thanks guys. And of course, all my fabulous producers back there, Lucas, Dylan, they're doing all the lifting with the phones. Because without my team, I'm just another pretty voice on the radio. Thanks again, everybody. You've been listening to the Protect Your Assets show. I am David Hollander, the Sandman. Have a great weekend. Go out and make the rest of your life the best of your life.
Investment advisory services are offered through Liberty Wealth Management, a registered investment advisor. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions. The strategies mentioned are not suitable for everyone. The information expressed does not consider your specific situation or objectives and may not be appropriate for all investors. Past performance is not indicative of future results. To better understand the risk associated with investing and how it reacts to different market conditions, listeners should always consult with their qualified investment professionals, financial advisors, legal or tax specialists, and conduct their due diligence before making any financial decisions or taking any action. The legal information provided on the air is not intended to substitute for callers hiring their lawyers to advise them about personal legal matters. Investments involve risk and, unless otherwise stated, are not guaranteed. Liberty Group LLC paid for the following program, and the host's views and opinions do not represent those of the station or its ownership. California Life Agent number 048569. Persons engaging the services of one affiliate of Liberty Group LLC companies should be aware that each company is operated separately. You're listening to the Protect Your Assets Radio Network.